Hey, gang. Larry Bailey, Mortgage Workflow Partners. This is another weekly update for what's going on in the market. And there's a ton of information you want to check out. And as the promo said, make sure you check out masterencompass.com. You'll join the community of other people using the Encompass platform, administrators and users. It's honestly what I feel is the best community ever. So check it out. Here's what's going on. We've got tariffs announced, of course, unless you've been living under a rock, you know that. We've got also some labor data surprises. This is going to go what happened last week, which feels like a year ago already. But this is going through the recap of March 31st, 2025. We saw a stronger than expected job growth, but the labor sector continues to deliver mixed messages. However, this news was overshadowed, of course, by the announcement of reciprocal tariffs, whatever those things are. Here's the stories. We've got global reciprocal tariffs announced. We've got next story is March sees stronger job growth, but with caveats. We've got private payrolls rebounding. We've got job openings fall in February. We've got continuing jobless claims reach a 3-year peak. We've got a family hack of the week recipe for you in case you're interested in that. And we're going to talk about what's going to happen this week. So let's get to the first story. We've got global reciprocal tariffs announced. Now, I remember back in my early learning days, years, I should say, of learning all about tariffs, and we've always had them. Like, this is not a new thing, but to use them as a weapon, basically to pressure negotiations, is something that we haven't done in quite some time. Last week, we saw President Trump announce a 10% quote baseline close quote tariff on imports, along with country-specific tariffs set at roughly half the rates of those countries charge on U.S. exports. These sweeping new tariffs have created significant market uncertainty as it remains unclear how other nations will respond. Well, yeah, okay, we now know because it's now a week later, right? In the short term, the announcement sparked a sharp sell-off in stocks with bonds, including mortgage-backed securities, benefiting from a flight to safety, which is typically what we see, right? Historically speaking, money flows out of equities, it flows into mortgage-backed securities and other vehicles like that and bonds, right? And it makes mortgage borrowing less expensive. And that's exactly what happened last week, not so much this week. Given the fluid nature of these ongoing market dynamics, we will closely monitor developments in the days and weeks ahead. Next story. March sees stronger job growth, but with caveats. And what we see here is the on the graphic. And by the way, if you're listening to this on a podcast replay, thanks very much. Make sure you head over to masterencompass.com. You can see the full video replay here. March delivered a surprising update in job growth, with 228,000 new positions added, significantly exceeding the expected 135,000 to 140,000, according to the Bureau of Labor Statistics. That's the BLS. However, the headline figure may be subject to revision, of course, in coming months, as typically it happens, as January and February saw a downward adjustment totaling 48,000 fewer jobs, 48,000 fewer jobs, so it was reduced lower from January and February. Additionally, a closer look at the March data, if you really look at it, it reveals some underlying weaknesses. It's important to remember these are two different reports, right? So the unemployment rate ticked up slightly from 4.1% to 4.2%, and average weekly earnings increased 0.3% from February to 3.2% year over year, down from 3.7% in the prior report. So we saw a 0.5% decrease. Hours worked also remained at 34.2 for a second straight month, just above the lowest level since 2010 of the COVID-19. So we're working less or earning less. Interesting stuff, right? Furthermore, the job gains were also concentrated on specific age groups, with 20 to 24-year-olds and those 55 and older seeing the biggest increases, while those in the prime earning ages, whatever that means, of 25 to 54 actually lost 107,000 jobs. Well, bottom line here is the headline job growth figure, of course, was stronger than expected. The headline was March employment report comes with several important caveats that we think suggest an underlying weakness in the labor market. We'll see. We've got private payrolls rebounding. Here is the ADP employment. We can see kind of like the downward thing, and then there's a little pop in March. So in March, the private sector exceeded expectations by adding 155,000 new jobs, which was well above the forecasted 105,000. Gains were seen across companies of all sizes, with small businesses adding a notable 52,000 positions after several months of weak or negative growth. My business was one of those companies that added. So thank you very much, clients of Mortgage Workflow Partners. While the bulk of hiring occurred in the service sector, like mine, which accounted for 132,000 new jobs, there were also positive signs on the good side, with manufacturing deliver stronger than average job gains for the second consecutive month. I certainly hope that continues in spite of these tariffs. Wage growth remains solid, though it dipped slightly for the existing employees from 4.7% to 4.6%. Those changing jobs saw a larger decline from 6.8 to 6.5% raise, and the pay premium for job transactions matched a series low of 1.9%, which suggests less poaching and enticement to switch roles. So what we found in this story is, according to ADP's chief economist, Neela Richardson, quote, despite policy uncertainty and downbeat consumers, the bottom line is this. The March top line number was a good one for the economy and employers of all sizes, if not necessarily all sectors, close quote. That's a very positive outlook, Neela. Very positive outlook. Next story here. We've got job openings falling in February. The number of open jobs declined modestly in February, down from 7.76 million in January to 7.57 million, falling just short of estimates. The drop was particularly pronounced in sectors like trade, finance, leisure, and hospitality. The hiring rate at 3.4% and the quit rate, which is 2%, remained near decade lows, excluding, again, the COVID-19 period. So the low hiring rate poses challenges, of course, for the unemployed seeking new roles, while the soft quit rate indicates diminished confidence in the job market, aligning with the ADP data that also showed lower pay premium incentives for switching jobs. We just went over that story. So in this focus of this story, the bottom line is job openings and followed a continued downward trend, well below the 2022 peak of 1.2 million. Remote work has also led to job listings being posted across multiple states. This potentially inflates the job opening labor turnover survey, JOLTS, data that indicated even fewer openings than reported. Additionally, the ratio of job openings to unemployed persons has significantly decreased from over 2 in 2022 to 1.1, which is really important. This is actually one of the things that stands out for me in this job openings report, because when you have that ratio of job openings to unemployed, when it's higher, that means people have a better chance of finding a job that works for them and their location, et cetera. But when you have that closer to 1, it's 1 to 1. And so now it's really, really tough. And that just shows it's another signal of underlying weaknesses in the labor market. So it's all in the data, gang. I keep telling everybody it's all about the math. If you thought you were over math after grade school or high school or college, yeah, you were wrong. All right, here we go. Next story is continuing jobless claims reach a 3-year peak. Weekly initial jobless claims declined slightly from 219,000, staying historically low. However, more concerning indicator is the persistent rise in continuing unemployment claims, which goes back to that factor I just told you about, is that 1.1 thing. So the continuing unemployment claims increased by 56,000 to reach 1.9 million. And we actually saw this is the highest level since November of 2021, aka COVID, right? So additionally, the recent data from Challenger Gray and Christmas showed a 60% surge in job cut announcements in March, reaching 275,240 Americans who lost their jobs due to job cuts, the third highest monthly total on record. That's record. That's not like recent, decade. That's on record. These cuts were concentrated, of course, in the federal government sector. Furthermore, hiring totals in the first quarter were the lowest period since 2012. So if you take a look at all this story, is while the new unemployment filings have mostly stayed muted, the elevated continuing claims, along with surging job cut announcements and declining hiring, collectively point to ongoing challenges in the employment landscape. Guys, personal note, I've been saying this for a long time, and I know that's not what this podcast is about, but when it comes to what I see, and again, I'm 54 this year, sorry, I'm forgetting how old I am. And I've been in mortgage lending since 1993. I've been in banking since 1987. You got to cut your debt and you got to stockpile your cash. And I know that's easy to say when you're ahead of this, but I'm telling you right now, people, I've been through times where I've leveraged things and made out, and I've been through times where I've declared bankruptcy and lost my house and everything else and failed business. Like I've been through all this crap, and it's horrible. I'm telling you right now, this is not, in my opinion, this is not going to be a smooth ride. This is going to be chaos and uncertainty. And there's three things that you need in life when there's chaos and uncertainty. You need equity, you need credit, you need cash. Those are the three things that everybody needs. But right now, when there's uncertainty, equity, credit, and cash, and you always want to get credit when you don't need it, not when you do, because that's the way it works. So to everybody out there that's going to be going through these changes, I feel for you, and I hope the best for you, and I hope we get through this come out on the other side much stronger somehow, some way. Okay, going into the family hack of the week, gang. If you are into cheese, April is the National Grilled Cheese Month. I didn't know that. Now you do. So why not try a delicious twist on this classic sandwich? There's a tomato bacon grilled cheese. Man, that sounds good. The tomato bacon grilled cheese from All Recipes. It's on screen. If you're listening to this on podcast, head over to masteringencompass.com. Check out the family hack of the week recipe. It's got 2 pieces of bacon on there and 2 tomatoes. It's good stuff. Here's what we're looking for this week, gang. Inflation data. We'll highlight this week's calendar with the release of March's Consumer Price Index. That's a CPI on Thursday, and the Producer Price Index, PPI, that's on Friday. Additionally, the minutes from the Fed's most recent meeting will be released Wednesday. All this is probably going to impact the markets, not to mention all the things that are happening with the tariffs and the reciprocal tariffs and the reciprocal tariffs. Lots of tariffs. My name is Larry Bailey. I hope you have a great day. Hope this is helpful for you. We'll continue doing these every week. You be well. We'll see you now. Bye-bye.